for each of these segments. And one of the things the gentleman before you raised was what value does IFC or FMO or DEG brings in? They also have expertise in terms of what solutions have been used in similar countries. I won't say that we will borrow solutions which are used in developed nations, but India or say even Sri Lanka, Philippines, they also have solutions which might be useful for us. And the good news is we have solutions which will be useful for them. So we are working with IFC and FMO to further develop our monitoring processes and
or you have planned to take to reach that target?
Mr. Khalid, thank you very much. Um, our first quarter figure was a little low. I think we had questions. We wanted to complete a number of things. Capital was an important point. The Tier 2 bond raising, completion of, and I've also mentioned something about composition. That was also important. So capital was an important point which we wanted to address and we have addressed now. The second point which comes into mind is when you have corporate, when you have retail, when you have commercial, when you have SME, you want to look at a mix of where you want to lend to. Now, in certain areas, certain types of transactions or customer segments, you will find SME, if you can address the issue of NPLs, and which I think we've been doing for the last 2 years, gives you better returns. We are focused from last year onwards heavily on retail. And if you look at our retail figures right now, at the beginning of last year, or say 2015, we were disbursing around, and that is the strength of Citibank. The number of options we have. And I must not forget that we also have an Islamic banking window. There are about 6 to 7 banks who can do both conventional retail and SME. Revenue, whether it's fees, whether it's in those sectors. So you can so the solutions for them goes beyond just providing finance. It involves bringing in partners, maybe helping them to sell off land assets, And our recovery team, both in what we call the retail finance unit as well as our special asset management, they're in a position to detect deterioration very early on and then to address the situation. So the last 2 years, NPLs in those sectors for new disbursements, especially the repayments and the cash flows and the amount of data which we're getting is substantially superior. So we think this is a business we definitely want to be involved in, and we definitely want this segment to grow.
One last question. Do you have any target portfolio mix going forward for your loan book?
Yes, we do. There was a time when I first joined the bank, when corporate bank was about 75% of the book. And today, it's between 55 to 60%. I think it's around 55%. We would like corporate to continue growing as it is. We have a lot of value propositions there. They have multiple streams of revenue, whether it's fees, whether it's interest, and we want them to continue to go and expand their value proposition. But simply put, SME using multiple channels, not only just branches, but our agent banking, as well as our internet banking and agent banking, this will grow much faster. So the ratio which you have mentioned, I think I would like to see in the next 2 years, our corporate banking to be between 40 to 50%, and the rest divided between retail and SME. But we have every intention of ensuring that corporate continues to grow and prosper based on quality asset acquisition.
Okay, thank you.
Hello, this is Galip from IDLC. My first question is regarding the loan portfolio. Year over year, your loan portfolio has grown by 15.1%. But if we look from December, it has only grown by 6.1%. So in next 6 months, you need to grow at least 10% in order to beat your last year growth rate. What additional effort you are taking or you have planned to take to reach that target?
Mr. Galip, thank you very much. Our first quarter figure was a little low. I think we had questions. We wanted to complete a number of things. Capital was an important point. The Tier 2 bond raising, completion of IFC, and other similar initiatives. And I've also mentioned something about composition. That was also important. So capital was an important point which we wanted to address and we have addressed now. The second point which comes into mind is when you have corporate, when you have retail, when you have commercial, when you have SME, you want to look at a mix of where you want to lend to. Now, in certain areas, certain types of transactions or customer segments, you will find SME, if you can address the issue of NPLs, and which I think we've been doing for the last 2 years, gives you better returns. We are focused from last year onwards heavily on retail. And if you look at our retail figures right now, at the beginning of last year, or say 2015, we were disbursing around 30-40 crores a month. That figure has now exceeded 100 to 110 crore a month. And I think we are very much up there with the best banks in the country, the top 3 banks in the country who are very active in the retail market. I think we would be very close to being number 1. So the options for us from a moment to moment or a month to month or a quarter to quarter to say, okay, this quarter, until we can get this segment and the pricing strategy, the earning revenue strategy right, we will shift our focus to the other segment. And that is the strength of Citibank. The number of options we have. And I must not forget that we also have an Islamic banking window. There are about 6 to 7 banks who can do both conventional banking and Islamic banking. We are one of them. So out of the 56 or 57 bank industry, that's 6 of us who can do that. So the options for us are much wider than the other banks. In those months, we are focused on retail and SME. But I am aware of the pipeline, which I see in corporate bank, and I'm very confident that corporate bank will meet their budgeted figures for this year.
Thank you, sir. My next question is regarding your spread. In this quarter, your spread has improved by 30 basis points, and now it stands at 2%. What do you see at the end of the year, and how do you manage to improve it where interest rate war is actually going on in the industry?
I do not see spreads improving radically. If you're talking about corporate, the volumes will be there, but the spread itself will maybe fall a little bit. So it's important that each corporate has many streams of business. It's not just about term loans or say working capital. It's also about advisory services, of letter of credits, of exports, of payroll services, of payment systems, putting them together with external parties outside the country, financing capex with the support of others, multi-currency loans. So what Citibank can do, and only a few other banks in the private commercial industry can do, is do all of these. We can, so the pressure of, or the stress of spread is less on us. And if you look into last year's spread and this year's spread, you'll see that yes, our spread has fallen, but less so. But add to that almost a 30+% growth in our trade finance earnings. So that one makes up for the other. And so this is definitely going to be an area of concern. The central bank wants us to reduce spreads, and I can understand their interest in this. It is incumbent on the banks to ensure that there is a depth in their product suite to handle questions like issues like this.
So my next question is regarding your deposit mix. Do you have any numbers in your mind that you want to see your CASA ratio there?
Now, but I can tell you that whenever we take over, whenever we go into a company, there's a substantial focus on taking on existing businesses as well. So it's not that we go into a company and we say that, okay, we will just do this new project. We usually say that, can we do both? And to achieve that result, I think our value proposition, all the things which I have mentioned, which ranges from interest rates, but also the composition of products which we can give, allows us to provide a value proposition better than their existing customer. If I were to guess, I would say it would be 50-50, but it would be 60-40, with 40 or 50 being takeovers and 50% would be new projects, many of which would be new projects of existing customers.
Thank you.
Thank you, ladies and gentlemen. Thank you, ladies and gentlemen. We would now request you all to join us for refreshments outside.
Thank you. Thank you, everybody.